We got some breaking news to bring you from Wall Street following a week of volatile stock swings. There you hear the bell. U.S. markets opening again right now after that new escalation in the U.S.-China trade war. Earlier this morning, Beijing hit back against that 145% U.S. tariff by raising its own levy on U.S. imports to 125%. For all this now, I'm joined by Investopedia editor-in-chief Caleb Silver. So, Caleb, it has certainly been an up-and-down week. Stocks fell again yesterday after rebounding the day before. We just heard the opening bell on Wall Street. You know, futures were down a little bit. Looks like the Dow's down a little bit right now. How are the numbers looking?
Yeah, they're looking sour, pretty south. And just a couple of hours ago, we were speaking and futures were in the green. It just shows you how volatile and uncertain this market is right now, how investors really can't look into the future. And when we can't see the future, we typically sell first and ask questions later. So more pressure for stocks, even after that relief rally earlier in the week. Now we have a reversal of the reversal because of these escalating tariffs between China and the United States. We know that's going to put pressure on the economy.
It sounds like deja vu, but as we mentioned, China is once again hitting back with tariffs, raising its own levies on U.S. products to 125%. That's up from 84% most recently. How much of a difference is this going to make with consumers going forward? How quickly could consumers start to feel the effects of this?
Yeah, we'll start to see price increases if we haven't already starting next week when a lot of these go into effect, and it'll hit the consumer electronics area first. It'll hit a lot of minerals and metals that come in from China as well, but also a lot of the exports that go over to China, and that's a lot of farm product, and that's a lot of U.S. manufactured goods that we send to that country. We do some $582 billion worth of trade between the two countries right now, and we're looking at tariffs of over 100%. The effective tariff rate is very large. It's going to be very difficult for businesses large and small to deal with those higher import prices coming into this country because we do so much assembly here of products with components made in China.
We see the Dow down more than 200 points right now. So big banks, Caleb, they've started reporting their earnings during this market turmoil, looking at the first quarter. Is that telling us anything? What are the banks saying?
Well, earnings reports are by definition rear view mirror. This is the last quarter. In the last quarter, things were starting to look a little bit better. We saw a little bit more. We saw economic growth actually ending the year. The forecast, though, is what we want to pay attention to. And if you listen to Jamie Dimon, who's the CEO and chairman of J.P. Morgan Chase, he said a recession could be more and more likely, and these tariffs are only going to put more economic pressure on the United States as a country as we try to transition our economy. I would expect more turbulent times ahead.
Yeah, Jamie Dimon saying U.S. economy faces turbulence right now. So we know President Trump has declined to rule out an extension to this 90-day tariff pause he implemented this week, at least for now. He says he's thinking long-term. This short pause, what does that do in the bigger picture? What are some of the factors that could influence this decision? Could a lot be accomplished in that window that helps out?
Potentially, you could get better multilateral trade deals with countries, and you could get more investment in the U.S. economy here in the United States from those countries and companies abroad. But ultimately, it comes down to what's the tariff rate going to be? What does that mean to consumer spending and business spending? Because that's what drives economic growth in this country. The president has warned of a transition period as the economy weakens a little bit. That's very difficult for a lot of low and middle income families to swallow, and especially small businesses as well that can't really forecast orders, sales, or hiring.
Caleb, what is it you're keeping an eye on, whether it's today or early next week, things that could have a huge impact on where things go, not just with the stock market, but when it comes to this trade war?
Yeah, the bond market, the U.S. Treasury market, the U.S. 10-year Treasury, long-term Treasury bonds, the most widely held, most trusted asset on planet Earth, held by countries like China, like Japan, throughout Europe, but also big institutions, institutional investors. And we've seen a big sell-off in Treasury bonds lately in prices, and you've seen the yield spike, which tells you that they have little faith in this economy that's going to be able to continue to grow as it faces higher inflation and more doubts about the trustworthiness of the American government when it comes to negotiations between other countries.
Thanks for watching. Stay updated about breaking news and top stories on the NBC News app or follow us on social media.